Welcome back, traders. After yesterday's bear clawdown left IWM nursing wounds below support and Bitcoin probing fresh lows, while today's bull ambush flipped the script with a tidy green sweep that halted the bleed cold.
Quite the reversal.
Yeah, IWM's 1.44% surge feels like payback, but, with XLF squeezing in that triangle and services PMI crushing it at 52.4, we're kind of at a pivot.
Definitely. Consumer fire could fan flames, or dollar resistance can douse them quick.
Exactly. You're tuned into the Stock Market Summary series, and for those of you that are new, just note that none of this is buying or selling advice.
Nope, just commentary and education.
Right. Nothing we say here is financial advice. Okay, let's get into it.
So yeah, today was a pretty decisive directional shift. SPY added, 0.35%?
Yep, and QQQ gained 0.65%, DIA up 0.47%. A nice green day.
But the real story, I think, is the leadership. Consumer discretionary, XLY, climbing a standout 1.22%.
That's a strong signal.
It really is. That strength tells us the consumer is the current engine driving market sentiment right now.
Absolutely. And that takes us right to IWM, the small caps. That 1.44% jump was impressive, no doubt.
Huge jump.
Yet, here's the critical technical hurdle, right? It's still trading below that broken trend line in its 20-day moving average.
Still below resistance.
So it's a great bounce, but this remains a key inflection point. It only feels, real if buyers can confirm and actually close above those technical ceilings.
True, but you have to look at the velocity of that bounce too, that sheer speed.
Okay, fair point.
Strong velocity often precedes momentum shifts.
Yeah.
But you're spot on. The sellers are still organized right at that prior supply zone. And identifying precisely where those reload points are, that's just critical risk management. It's the difference between a solid trade and, getting stopped out on a swing.
Exactly what we hammer home in the mentorship, right? Knowing those zones. Probability stacking.
Precisely. So if small caps are still, let's say, recovering, we look to financials for guidance.
Right. XLF, it's squeezing really tightly inside a triangle pattern.
Yeah, classic consolidation there.
Markets often take their cue from the banks, so we really need to watch which direction that breaks. It'll likely dictate the next bigger move for the indices.
And related to that, the DXY, the US dollar index, it paused right at its 200-day moving average after taking out that August 1st high.
That pause is important.
Incredibly important, yeah, because it provides a temporary buffer for stocks. If the dollar reverses hard from here, it could signal easier global liquidity.
But if it breaks out?
If it breaks out, watch out. That, combined with that really strong services PMI data we saw, is definitely forcing the Fed to, maybe recalculate a bit.
Okay, perfect time for this then. As always, guys, if you've got a stock you're watching or maybe a question about the markets, drop it in the comments.
Yeah, we do look at those.
We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button.
Totally free. Helps us out.
Totally free and helps us out in a big way. And click subscribe too so you don't miss a beat. You can always unsubscribe later.
So speaking of listener requests, that actually gives us a chance to look at Bruker Corporation, BRKR. Caught our eye because of its pattern setup.
Okay, BRKR? What are we seeing?
Well, the monthly chart is still wrestling with a downtrend, got to be honest there. But the weekly chart, it broke the resistance trend line of a textbook falling wedge.
The falling wedge break. That's a powerful, bullish reversal signal we always look for.
Exactly, and it looks like it's getting ready to confirm too.
How so on the daily?
On the daily chart, BRKR has been making steady higher highs and higher lows since September 3rd. And right now is challenging the 200-day moving average.
Okay, so that's the immediate test.
Yep. If buyers can push through here, that 44 level looks like the next significant resistance zone to watch.
And learning to spot these setups, the wedges, the triangles, and then timing the entry and exit, that's the whole game, isn't it?
It really is. Something we refine constantly in the Grok Trade mentorship. Pattern recognition is key.
Let's pivot back to that economic driver you mentioned, the ISM services PMI.
Right, the big beat. Came in at 52.4, absolutely crushed the 50.8 consensus.
Wow.
So this services expansion is like a formidable counterpunch to the manufacturing weakness we've been tracking.
So the consumer side is still firing?
Exactly. The key insight here is that this massive consumption signal is basically the engine powering XLY and suggesting that maybe those recession fears, for now at least, are a bit misplaced.
Interesting. And even crypto's finding some relief today.
Yeah, Bitcoin, which took that brutal drop, it rebounded 2.11% off the $99,000 level. Looks like it's etching a temporary double bottom, kind of mirroring that June 22nd swing low.
So a potential support level forming.
Potentially. Probabilities lean toward a bounce extension if buyers can hold it tomorrow. We also saw gold and silver participating, bouncing sharply.
But still in that sideways chop.
Yeah, classic sideways chop for the metals right now. GLD up 1.16%, SLV up 2.13%.
Okay, so today's action really highlights why pattern recognition and probability stacking matter so much, doesn't it?
Absolutely. From the IWM inflection point to the BRKR wedge we just discussed, and even the BTC double bottom potentially forming.
It's all about identifying those edges.
Right. We focus hard on establishing those high probability edges and, crucially, those bulletproof risk rules in our mentorship program. That's how you aim for real, repeatable results.
So wrapping up, what does this all mean for tomorrow? Today was, well, a broad green rebound.
Fueled by that unexpected strength in services.
Which temporarily overshadowed the small cap weakness, yeah. So we've got two key inflection points, it seems.
What are they, in your view?
Well, first, the direction of that XLF triangle break. Huge signal there.
Agreed. And second,
whether IWM can finally actually confirm its rally above that 20-day average and the broken trend line.
Yeah, the market narrative really depends on confirmation from both consumer, like through XLY, and the financials via XLF.
Which raises an interesting question for you, the listener, to maybe consider overnight. If XLF breaks north, are we maybe underestimating the consumer's ability to pull manufacturing completely out of this contraction?
That's a good question. Something to mull over for sure.
Definitely food for thought. All right, wishing you all a great rest of the day.
Take care, everyone.
And we'll catch you in tomorrow's market summary.